Welcome back to The Explainer. Today we're diving headfirst into a space where two totally different worlds collide. We are talking about the exact intersection where traditional finance, or TradFi as we call it, meets the decentralized frontier of Web3. Our focus for this explainer, PayPal USD, commonly known as PYUSD.
Now you might be wondering, and it's a question that instantly grabs your attention, right? Why exactly did the world's absolute biggest online payment company decide to launch its very own cryptocurrency? Well, today, we are going to peel back the layers of this onion. We'll unpack the mechanics, the partnerships, and the underlying tech that make this digital asset tick to uncover what it actually means for the future of money.
Okay, let's dive into this. PayPal is a brand pretty much everyone recognizes. They've been a pioneer in digital payments for over 2 decades, with hundreds of millions of users worldwide. And by anchoring our understanding of the sometimes complicated Web3 ecosystem to a highly familiar, globally trusted brand like this, making that leap into blockchain technology suddenly becomes a whole lot less intimidating.
Here's a quick roadmap of what we're covering today. First, we'll meet PayPal USD. Second, trust and transparency. Third, how to use PYUSD. Fourth, PYUSD meets Stellar. And finally, number 5, the developer ecosystem.
All right, part 1, meet PayPal USD.
So, what is PYUSD exactly? Well, at its core, it's a stablecoin. As a quick refresher, that means it's a blockchain-based digital currency that's pegged one-to-one to a traditional asset, in this case, the US dollar. Now, most cryptocurrencies out there, like Bitcoin, fluctuate wildly, which kind of makes them pretty unsuitable for buying a cup of coffee. Stablecoins solve this. They literally give you the best of both worlds, the lightning-fast speed of blockchain paired with the everyday stability of fiat currency. It really is the perfect entry point.
Now, what's really interesting is how PYUSD differentiates itself from the existing heavyweights in the stablecoin market, specifically USDC and USDT. While PYUSD is the newer player, though it has already surged past a $1 billion market cap, it operates under the incredibly strict oversight of the New York State Department of Financial Services. When you combine that tight regulatory framework with the massive brand recognition of PayPal, it creates a highly distinct, trust-focused profile in the market.
Moving right along to Section 2, Trust and Transparency. Look, in the crypto space, especially these days, the absolutely most critical question anyone can ask is, how do we know the money is actually safe? Well, the answer lies behind the scenes with a company called Paxos. Paxos Trust Company is a limited-purpose trust company and a regulated blockchain infrastructure platform. They are the actual official issuer of PYUSD. By partnering with Paxos, PYUSD gets stringent risk management right out of the gate, so you aren't just trusting a tech company, you're actually relying on a heavily regulated financial institution.
Let's talk about that one-to-one guarantee. It means customer funds are backed 100% by US dollar deposits, short-term US treasuries, and cash equivalents. Crucially, though, client assets are held bankruptcy remote. That's a fancy way of saying your money is segregated and secure even if the issuing companies were to somehow face insolvency. It's a robust, incredibly solid financial foundation designed entirely for stability.
But, hey, we all know that in finance, promises are cheap, right? You need verified facts. To make sure this is entirely transparent, monthly attestation and reserve reports are conducted by top independent, third-party accounting firms. Historically, firms like Withum Smith Plus Brown and now KPMG LLP audit these reserves. That means literally anyone can publicly verify that the dollars backing PYUSD are sitting exactly in the bank accounts they're supposed to be in. Which brings us to Section 3, How to use PYUSD. So, how do you actually get started? It's remarkably frictionless, which is entirely the whole point of a major TradFi company entering this space. For eligible users, you can buy it directly inside your PayPal or Venmo app. No need to manage complex multi-chain switches or cryptographic keys if you don't want to. From there, you can easily transfer it out to external Web3 wallets or platforms, like coins.ph for users in the Philippines. Or you can trade it and even stake it to earn yield on self-custody crypto platforms like Tasty Crypto.
And this brilliantly illustrates the dual nature of PYUSD. On the TradFi side, you've got zero-fee transfers between PayPal users and the ability to fund your normal, everyday online checkout purchases. But on the Web3 side, because it's an ERC20 token on Ethereum, you can plug it directly into decentralized finance liquidity pools or use it for programmable smart contract integration. It seamlessly bridges everyday online shopping with advanced crypto utility.
Okay, Section 4, PYUSD meets Stellar.
1/10 of a single penny.
Literally a fraction of a cent. That right there is the average transaction cost on the Stellar blockchain network. No way, right?
Now imagine pairing that near-zero cost with the ability to send money entirely across the globe, bridging digital wallets, global merchants, and mobile phones, with the transactions settling in just about 5 seconds. By launching PYUSD on the Stellar network, PayPal tapped into a blockchain that was purpose-built from the ground up for real-world global financial use cases. It's fast, it's scalable, and it's practically free.
The absolute magic making this possible is Stellar's consensus mechanism, which is called Proof of Agreement, or POA. Unlike Bitcoin, which uses traditional miners and energy-heavy proof of work, Stellar creates consensus through a series of exchanged messages between participants to finalize the ledger. This tech is what allows the network to process an incredible peak throughput of up to 5,000 transactions per second, all while remaining highly energy efficient.
Finally, Section 5, the developer ecosystem. So the crucial point here is the contrast. When developers rely on traditional payment rails, they are forced to deal with clunky batch processing, limited banking hours, and slow net settlement that can literally take days. Now contrast that with building on Stellar using PYUSD. You're getting Rust-based Sorbonne smart contracts, 24/7 uptime, 5-second ledger closes, and a deeply composable, totally programmable financial environment.
And the toolkit available to developers to make this happen is absolutely packed. You have Sorbonne for smart contracts, the open-source Freighter wallet for user interaction, and the incredible Anchor platform, which gives you standardized APIs for instant fiat-to-crypto on- and off-ramps. There's even a Stellar disbursement platform for sending massive payouts at scale, and a completely free testnet environment to practice without risking real money. It's a powerhouse suite designed to bring everyday finance on-chain.
We have covered a massive amount of ground in this explainer today, from the fundamentals of stablecoins backed by real-world treasuries, all the way to lightning-fast global networks like Stellar. Which leaves me with a final thought I want you to ponder. As the friction of traditional banking disappears, and we move into this wild new era of programmable, borderless money backed by global titans, how is this going to change your daily transactions? I hope this sparked your curiosity to learn more about the future of global finance. Thanks for joining me, and keep exploring.